What is the payroll and personal cycle? The payroll and personal cycle begins with hiring employees and ends with paying them for the services they perform and the government and the other institutions for withheld and accrued payroll taxes and benefits. There is 5 management assertion of payroll and personal cycle. Number 1 is occurrence, number 2 is completeness, the number 3 is cut off, the number 4 is occurrency, and the number 5 is the classification. For the occurrence, wages and salaries are only paid to non-fictitious employees and for their work performed. For the completeness, all existing payroll transactions are recorded in the payroll and accounting records. Next is accuracy. Wages and salaries should be calculated based on work performed and terms of employment. Cut off. Payroll transaction should be recorded in the correct period. The last one is classification. Payroll transaction should be properly classified.
Audit objective that related to payroll and personal cycle. The overall objective in the audit of the payroll and personal cycle is to evaluate whether the account balance affected by the cycle are fairly stated in accordance with generally accepted in accounting principles. So now I will mention 6 audit objectives that related to payroll and personal cycle. First, we have to make sure recorded payroll payments are performed by existing employees. To make sure existing payroll transactions are recorded. To make sure recorded payroll transactions for the amount of time are actually worked at the proper pay rates, just like withholdings are correctly calculated. To make sure payroll transactions are correctly included in the payroll master file and correctly summarized. To make sure payroll transactions are correctly classified. And the last one, to make sure payroll transactions are recorded on the correct dates. Most cycles include at least 2 classes of transactions. But for payroll only has 1 class, which is payroll. Payroll has only 1 class because the receipt of services for the employees and the payment for those services through payroll usually occur within a short time period. These transactions are generally far more significant than related balance sheet accounts. Payroll related to accounts such as accrued payroll and withheld tax are usually small compared to the total amount of transactions for the year. The relevant account of payroll and personal cycle, we have 4. First, payroll cash. Payroll cash is a separate bank account for your business that is strictly used for payroll. Instead of lumping all your business expenses into one account, you will pay employee wages with your payroll bank account. The money going into the payroll account will be used for payroll. Second, payroll expense in the amount of salaries and wages paid to employees into exchange for services rendered by them to a business. The term may also be assumed to include the cost of all related payroll tax, such as the employer's matching payment for Medicare and Social Security. And the third one, we have payroll withholding account, which withholding is the prepayment of income tax. We refer to the amount of wages taken from your paycheck for state and federal income tax as withholding. And now the last one. The last one, we have payroll accrued. Payroll accrued refers to accrued salaries, wages, commissions, bonus, benefit earned, and payable to the employees. In the simple terms, the liability arising from workers' salary expense which has been incurred but not yet paid is called accrued payroll. The next two slides, I will show you the whole look of relevant account of payroll and personal cycle. Take a look to understand better what I have been present before.
Okay, now let's talk about internal control. What kind of internal control that we can take in order to secure the accession? As we know, we have 5 accessions in payroll and personal cycle, which is occurrence, accuracy, classification, completeness, and cut-off.
What we can do for occurrence?
Occurrence, we can do proper segregation of duties between processing and personnel functions. Adequate personnel files are maintained. Work or time records are approved by person of appropriate level.
How about accuracy?
For accuracy, we can do internal verification to ensure that the calculation of wages and salary is in agreement with record of work performed and terms of employment.
What kind of internal control to take in order to secure the classification?
For classification, we can do a proper internal verification and approval for account charged to payroll.
What about the accession of cut-off?
Meanwhile, cut-off, we can do a notice of addition, termination, and change in pay rates and deduction reported promptly to payroll processing function.
Then, how about the completeness?
And for the last one, for completeness, we can update record for starter and leaver should be maintained by personnel office, and payroll processing function is provided with update information about leaver.
So now, let's move on to the test of control to the effectiveness of the internal control. First is occurrence. Observe and evaluate proper segregation of duties. For the example, person authorizing employee benefits costs are not responsible for recording. Check the authorization by appropriate for all addition, change, and deletion of personnel record and the authorization for payment of employee benefit costs. Next is completeness. Check the numerical sequence of the time or work records and the reconciliation of payroll summary and starter and leavers recorded in personnel records. Accuracy. Examine the client's record to see whether the client has checked the arithmetical accuracy and employee benefit costs to ensure the amounts are in accordance with employment contracts. Cut off. Examine indication of internal verification and test procedure for processing times or work record and for recording liabilities. The last one is classification. Review clients' procedure and inspect their record to verify there has been proper classification of employee benefit costs.
So, what are the substantive tests used to achieve the audit objective? So, the first substantive test is to review all the payroll journal, general ledger, and also payroll earning record for large or unusual amount. This is to ensure that all the payroll payments are from works that actually performed by the existing workers. The The second transaction is to compare the date of recorded payment in payroll journal with the date of cancel check or direct deposit and time record. This is to ensure all the recorded payroll payment are made on the correct date and time, and also amount. The third one is to recompute the hours worked from the time record. This is to ensure that the recorded payroll transaction are for the amount of time that is actually worked and at the proper pay rate. The fourth one is to review the time record for the employee department and also job ticket for the job assignment entries through the labor distribution. This is to ensure the payroll transactions are correctly classified. And the last one is to reconcile the disbursement in the payroll journal with the disbursement on the payroll bank statement. This is to ensure that the existing payroll transactions are recorded.
Now, what kind of audit evidence that related to substantive tests? There is 4 audit evidence that related to the substantive test, which is first, human resource data, second, payroll reconciliation, third, job time ticket, and fourth, time records.
What are the possible misstatements that might happen in payroll and personal cycle? There are a few possible misstatements that might happen in payroll and personal cycle. What are they? Let's check it out. So, some of the possible misstatements that might be happen in payroll and personal cycle are: first, misstatement of payroll expenses account; second, misstatement of direct labor and inventory; third, misstatement of commission expenses and commission liability; fourth, misstatement of payroll tax expenses and payroll tax liability; and lastly, misstatement of accrued payroll taxes and payroll tax expenses. This misstatement might be happen because it was intentionally or unintentionally done by the person in charge.